In this, our unfortunately last segment with Stephanie Link, we're going to cover her thoughts on the economy, her thoughts on the market, her thoughts on this, quite frankly, unusual period that we find ourselves in today as investors. For those who hopefully have been following along, and each week if you haven't been, we're going to link back to the prior videos because you won't want to miss them. We talked about your process, which begins with macro. So this is how much I have to learn because we're ending this series with macro. But I wanted people to get a good feel for who you were, the thought that you put into things before they fully realize why they should be listening to you. So let's start with this economy that we find ourselves in. For those keeping score at home, this again is June 26th, in case you're looking at it and saying, hey, this whole thing happened, a lot can happen in a month. What do you make of the economy? We could talk Fed, inflation. I know initial jobs claims is something from a macro perspective you think about. And again, very importantly, this is where you begin your whole process. So where do you see things?
Yeah, so we were talking earlier that a year ago in January, I would go to presentations and would ask show of hands of how many of the audience believed at the time that we were going to head into a recession. And it was unanimous that we were going to go into a recession and how wrong they were. They were right in the fact that the Fed at the time had just raised interest rates 550 basis points and in an 18-month time horizon. And in any other traditional cycle, that would slow the economy down, leading to a recession. Right. However, what the Fed was up against was $8 trillion of fiscal stimulus that was put into the economy during COVID, after COVID, and even a year before January, a new infrastructure bill of almost $2.5 trillion. So we all know that it takes a really long time for all that money to get into the system, and it usually takes 2 or 3 years. So you had all that money in the system up against higher interest rates. So it kind of counteracted, and actually the higher fiscal led to better growth. We saw acceleration in GDP all last year, and there was no recession. We grew 4.9% in the third quarter of last year. We grew 4% in the fourth quarter. We're going to grow a little less in the first quarter of this year, but I think we are poised to grow higher.
To those that, again, I think once again are believing, oh, we can suspend gravity, MMT, we just, print money. How would you caution those people, whether it's the momentum trade, to again stay disciplined, to understand that again there are cycles? I don't think you're saying that there wouldn't be a cycle.
No, I mean there will be a cycle, but the fiscal stimulus has distorted the cycle.
We're more mid innings, as they like to say.
I think we're in. Yeah, if we're okay, we're in mid innings, but mid innings can stay for a long time. Again, because we have such an incredible amount of money in the system. It's unprecedented. During COVID, you know how much money we put into the economy as a percentage of GDP? We put 60%. No, so great financial crisis, they did the same thing. They did a lot of fiscal stimulus. It was 5%.
Well, I know you've seen this chart. I think we've maybe shared it in the commentaries where they showed the monetary supply empty, something that I do spend a lot of time tracking based off others' recommendations. And to your point, when the GFC happened, it looked to that now it's a blip. When you go back and look at that compared to what we did in COVID, it just looks like a squiggle in the line. But at the time, it was the mountain on an otherwise relatively flat.
And I think we've seen the peak in rates. Maybe they stay higher for longer because we have better growth, and maybe inflation is a little stubborn and whatever. But we're starting to see rates come down. The bond market is actually doing the job for the Fed, and we do have the end of QT. So we have some things that are happening underneath the surface that kind of make the cycle a little bit unique. Yeah. Am I allowed to use that word?
For a cycle, not for how unique you and I are. Our personalities maybe, but yeah, it's a tough world, yeah. How, again, we could go on any of these things for 40, 50 minutes on their own. Real quick, is government debt a concern of yours at all? I know it's a concern. I think long-term we all understand fiscal prudence, but is that something you see interrupting this cycle anytime in the next few years, or do you think that's something we definitely need to address, but a problem for further down the road.
So I think it's a problem for my 17-year-old. I don't think that we're going to do anything in our lifetime. Maybe, in years and years. First and foremost, both candidates for president of the United States are spenders. They just spend it differently, but they're spenders.
Both parties have been for a while.
For a very long time. So we're not going to solve that issue in the next 4 years. But honestly, we also have, we're not getting into politics, but just our politicians like to kick the can down the road. And that's what they can do, and they will. I think it will lead to higher tax rates, obviously. I don't know when that will be. As I mentioned, I think it's really more down the road, but it certainly is problematic.
So you don't see it as
absolutely.
something that creates a crisis that interrupts the cycle in the near term?
No, I don't think so.
We won't hold you to that. Who knows? But good to get your thoughts. Last thing, and we can use this as a pivot point if you'd like into the market. AI, it's everywhere all the time. Maybe tonight we'll talk about how you see it shaping our industry. But more broadly than that, I know something we've been talking to our clients about that I've heard loud and clear from you in your writings, the podcast, and again in our time together today is, it's about more than one stock. And there are a lot of ways to play that, maybe even arguably play it safer. Tell us a little bit about how do you see that shaping the world? How does it shape what you're doing?
Yeah, there are two areas where chief technology officers are spending their money, AI and cybersecurity. That growth is going to be double digits until the eye can see, honestly. I think everything else in tech spending will continue to grow 2-3%, but AI companies are still just trying to figure out what it means for their businesses. They can't afford not to spend money.
I don't remember in my lifetime, sorry to interrupt you, Stephanie, where something is like, yes, we know this is the most important thing, but we're not really sure what it is.
Right. It's crazy, isn't it? Because it's so new. And AI is only as good as the data that's input into AI. So it takes a long time for AI to get good.
Right.
So there's that. And then cybersecurity, I think CTOs have said, to me anyway, they are afraid they wake up one day and their business is gone. So those are two areas where I think between now and the end of the decade, you absolutely want to have some sort of exposure. To your point, do you want to own the Mag 7 where everybody is jammed up on the same side of the boat? Certainly you could. I own a few, but not all. There are other areas we mentioned kind of the grid repair and data center and how much data center growth is going to need power. And that is just in the early, and it's only going to get amplified from AI. So there are parts of industrial. Did you ever know that some of the farm equipment companies that we know very well, they put AI into their tractors? And it makes them more efficient. They can produce more. So there's that part of industrials. We have takeout or fast food restaurants that are using the drive-through and all kinds of AI so that they don't have to have a person to do all of that. So there are so many areas. I think of one we were talking about energy earlier. The oil field services companies have been driving AI in terms of how they're helping their customers drill faster with less people. So it's everywhere.
Well, I think in to your point, even to that narrow rally, the good news, I think, for all of us as investors is lots of growth to happen.
Sure.
But lots of ways to access it without trying to go into, again, what might have entered into certainly a momentum, maybe even a timing type trade.
Yeah. And that's kind of the way I invest. I try not to find the most obvious. I just think that that's the most popular. And again, it's trying to be a little bit contrarian versus where the momentum is going. Many people do invest via momentum. That's just not the way I...
We're talking about, again, another stock that if you've been paying attention to things, from the 90s, that's still around and very popular, maybe in the Mag 7, so that should narrow it down pretty... That, again, did wonderful, wonderful things for 15 years in terms of their growth. Again, arguably a lot of the stories that people were using to justify a very high valuation in the late 90s came true or more, and yet the stock didn't go anywhere because, again, price matters. And again, I know that's your process. Well, lucky for us, we have Stephanie Link not only with us today, but to help be of service to you all as well, to help guide us through this. Thank you so much.
Thank you. It's fun.
She's not disappearing, so if you have interest in what she's doing, let us know. But in any case, we're grateful to be able to enjoy and use so much of the research and hard work you're doing in so many different ways.
Thanks so much.
Thank you.
That was great.
Yeah. We'll see you soon.